Hi everybody, David Kino with Basecamp Trading. Today is Wednesday, January 3rd. So we got the FOMC minutes here today at 2 o'clock. Looks like some of the highlights. In projections, almost all participants indicated their baseline implied lower federal funds rates would be appropriate by end of 2024. Okay. Few participants suggested FOMC could face a trade-off between dual mandate goals in the period ahead, meaning fighting inflation and keeping unemployment under control. Several participants observed that circumstances may warrant keeping policy rate at the current level longer than they currently anticipate. So, one interpretation of this is the market is reacting in a way that it's anticipating the Fed cutting interest rates by 75 basis points at a pace or starting that cutting sooner in 2024, let's say the first half of the year versus the second half of the year. Now, based on this statement right here, it seems that potential cutting of the interest rate, the federal funds rate, would be more likely towards the end of the year, in the second half of the year, based on that statement. Whereas this market is kind of priced in a way, it's anticipating it would be maybe towards the middle or even towards the beginning of the year of 2024. Market participants highlighted uncertainty around how long restrictive policy would need to be maintained. And this kind of follows the thought process we talk about every day in the trading room. We cannot make a determination when the Fed's going to cut interest rates because they don't know. They have to wait until they get the inflation readings from fourth quarter, first quarter, maybe even second quarter to see what that looks like if inflation continues to fall. We also have to continue to see what things look like in terms of the economy, economic activity, and even unemployment. Okay. FOMC members generally viewed addition to the word any comments on possible additional firming as relaying their judgment that rates were likely at or near rate cycle. So I think what they're trying to do is hedge what they're saying in the dot plot of cutting interest rates in 2024 with the need to be vigilant and still remain flexible in how they handle when that will occur. And again, it's not set in stone. No one knows what economic activity will look like between now and 6 months from now when this process might get started. Now, the market took that. I think it reacted fairly well. You can see the markets were in a consolidation right at 2. An initial negative reaction causing the market to fall about 12, 13 points, but it didn't break the low. And then an immediate rebound, breaking the high of the opening range, approaching 47.30, only to sell off again to the downside back to 47.08. So really what I see is a down move, an up move, a down move, a bounce, and now we're kind of closer to these pivot lows, and it's about 15 minutes before the close. So again, what does this mean? I think the market is absorbing that information and seeing that it really doesn't change much. I would pay attention to where we close. If we close near the bottom of the daily bar, I would look for a potential test of 4,700 in the morning because this bearish momentum on the daily has not significantly changed with that announcement. So be a little bit cautious. Any bearish trade should be good. Any bullish positions, you should be mindful. Watch how the market reacts at roughly 4,700. That is the neckline of this potential head and shoulders pattern. Okay, good luck.